Quick disclaimer. Trading carries a high level of risk, so anything done is your responsibility. The content on this channel is for educational purposes only and are my perspective and personal opinions. Alright, let's just get straight into the video. I can make this as simple as possible. Right now, this is the current price. Today is the 9th of January. Today my birthday, by the way. Big up on a self, man, them. You can see that this is live price. And what we're going to be doing, let me make sure the audio recording. Yeah, cool. So what we're going to be doing is breaking down like Tuesday's trades and then yesterday, which was Wednesday, which is right in here, right? Just how you could have take this up. So before we even get into the concept, before we get into the trades for yesterday, I'm going to show you what the concept is, just on a good, how it's supposed to look. And then we can get into the details after. Really simple. Cool. So in a trend has highs, lows, highs, lows, highs, lows, and it moves just like that. Your job is to identify where the highs and the lows are. Of course, you have indicators and stuff like that that can identify that, but the concept is very simple. The simple and short of it is, if you're trending upward, meaning you're buying, you're in a bullish market, you want to buy through the highs, and your stop loss is going to go under the low, the most recent low. Very simple. So let me show you what that would look like. So this is a high, this is a high. Let me just mark this off real quick. I don't want all of my videos to be, I don't want my videos to be too extensive, because it doesn't have to be rocket science. I'm just showing you on a good leg up what it would look like, because this goes on all time frames. Time frames does not matter. It's the same thing on repeat at all times, every single day, every day. So this is what that would look like, right? Very simply. And this is just on one time frame. So in here, the same thing is happening over and over on repeat. So now we can jump into the bar replay and understand what's going on. This is that leg up on that 1 hour. On the 1 minute, these opportunities are endless on repeat. It's the same thing. Do you see what I just marked out here? Those were the highs. As you can see where the highs are, and then once it's traded through that, your stop loss would be on a 1 hour chart. This would be your trade where it went through that high, and your low would be right here, and that would have been your trade on the 1 minute. That's what it would look like. So if we scale back up to the 1 hour, this is what we're working with. And right now, even just on that max potential there, that's roughly around a 3.88, right? So back down to the 1 minute, just to show you the fractality of the market, that it does the same thing on repeat. And this is how you're going to increase the amount of you're going to increase the ratio of what you're going to be winning, right? So let's get down into this. Where you saw the 1 hour create that high and it started to go lower, all you're looking for is the same thing of a break of structure, which I'm calling a break of structure, but reality speaking is a demand zone. So as soon as we see this input of money right here, we know that this is an impulse. Once you see a strong impulse, you know that the money is in the market. So that's the direction pretty much you want to go. I'll show you eventually how to identify that as well. I'm just gonna make sure we're still recording. Yeah. So this is what my typical box would look like, so that I would know that that's where the market is heading. Why? Remember, my 1 hour is trending upward. Therefore, any time frame lower, I'm looking for it to follow the higher time frame, nothing else. I don't need to be selling. I don't need to do nothing else but follow what I see my higher time frame doing. So it's cool to have a reference for the higher time frame. So for me now, I'm using, as you can see up here, monthly, daily, 1 hour, minute, and I only use really and truly the hourly and the minute chart, because that's a huge gap, a huge difference. 60 minutes in an hour, so that's 60 candles, 60 of these, and what that would look like is like this, 60 bars. So roughly right here is one entire hour, and that's just what that is. So that's one candle, one hourly candle, right? So this is roughly around 4 hours right there, as you can see. And in that process, what you're seeing is the exact opposite. which is the sells. So you are waiting for a buy opportunity to come in. What would that look like? Let me show you now. So as you can see, price broke right here the first time. Price broke right there and started to trend lower. I'll show you how I use the MAs and stuff, and how I use it to stay into the trades and stuff like that. So that went lower, so from low to high, and then it came back and broke that low, and you're looking at the same thing, right? So this, let me just do it real quick for you so you can understand. That was when that low was broken, came back down, same thing. So you can see how it started to trend lower, making lower lower lows and lower highs. Very simple stuff to see. Even when it continues, when it breaks up and you're thinking that it's breaking structure, you're still waiting on your setup, and I'm going to show you how it goes. So as you see, it's trending lower. Now look at when the break happens. This break right here, you understand? So with this break going to the highs, you are now shifting back to bullish. And as you can see on the lower time frame, as you can see, it's becoming evident, hopefully, that you're seeing the trend of how this thing works. Do you see this? And all you're doing is buying the same thing. So now the fractality of the market, right, this right here, even just seeing this should make you understand exactly how trends go. You see candles, how it goes. You see how candles go up. You see how candles go up, and then it comes back down, and then it goes back up, down, and then like this, and it's doing this. On a higher time frame, it's doing this, and then it might push up, and then it comes back down, and come back down, and keep going. This is what it's doing on the lower time frame. All of this, making higher highs, lower lows, all this extra stuff. So even just on this, remember, this is the big old 1 hour trade, you know, if you took it on the 1 hour. Now, even if you just went down to the lower time frames on the 1 hour, I mean on the 1 minute, your trade significantly changes, because let's say you took this one. Let's say this is the first one that you see, so that tells you that you're into a bullish market, and you wait until that high is created. You wait until the market does its thing and trades through that high. Again, here's the candle that traded through the high. You get in here, and that's your stop. Immediately, that's already significantly different from what this big trade is. So where this one is already at a 3.88 at its max potential there, this already reaches a 1 to 9. As you can see, it's right here, plain and simple in front of you. It's market mechanics. This happens on all time frames. I'm about to blow your mind simply. Here's why. Because if I go into 1 hour and show you this, see, I have it same way too, liquidity target top. This is the leg down, and I'm waiting on the price to trade through that high on a daily chart. Then you can get in on that low right there, right? Same way. So you're waiting on price right now to do the same thing. Here's how I'm gonna blow your mind. If I go to the daily chart, what do you see? You're seeing the same things. Here it is, the top right here, and then it trade through, and then your stop loss would be here, and that's your trade already. Look at all these other ones as examples that I've set up for you to see. And if you zoom out, it's the same thing. Here's the high, and it doesn't trade through until right here. So that would be your trade right there. And if you zoom back out again and go to the monthly, what do you see? It's the same thing. Yeah. You understand how I have it set up? Okay, Bubba. Go ahead, Bubba. Yeah, mommy's sleeping. Go ahead, Bubba. Daddy doing a video, okay? All right. It's the same concept. Okay. It's the same concept. See the high, and this is on the monthly chart. So it's all the same. You just saw me do it on a minute, and this is the monthly. It's all the same. It's literally the same on repeat. There you go. There's your high, and it's going back. As soon as it trades through it, this would be your trade, and that's the low right there. So right now, this is how the banks trade actually. So now there would only be about 0.98 in that. But how many months was this? 53 months, right? About 1600 days. But that's fine, because when people have billions of dollars and they do something like this, they're walking away with hundreds of millions of dollars, and they don't really care about the outcome of that. You know what I mean? Look at this. So now this is where the mind-blowing part can come in, because see, it's the same thing on repeat on a monthly, straight down to the minute in here. But look at this. What we did down in here, This is 1976. How you know that this is not some random new strategy? This was happening in 1986, the same concept. Do you see it? Look at this. In 1973, if you were still trading through the highs, that would have been your trade, and your stop loss would have been under that low. Guess what? Significantly. Look at this. This already going straight up to where current price is. You're already like hundreds into the, you know what I mean, into the profits. Like, you crazy. It's crazy how simple this thing is. And I'm going to eventually show you now how I use the MAs to even simplify that further. Why? Because fractality, what you're looking for in the fractal nature, remember how I showed you in the 1 hour how we did the highs and then went into the 1 minute, and in the 1 minute you had the same thing repeating. Here it is. So you have your high and your low. Now you're looking for the same break of structure. Here's when it broke right here, and it's happening here. So here you have your high. I'll just draw it in for you. You have your high, and it does the same thing inside of the structure. Inside of the structure. So now your first trade, instead of being this big coming through this high, could have been right here, through that high right there. And you're going to do this on repeat, and this could be your target, because a lot of times price goes up to the target and doesn't pass this. All this is really is one candle pushing down. This is the high of the candle, and then another bullish candle starting and pushing back up through that high. And this is how you get a trend, right? Simple example of that right here is, see the blue candle, how it pushed down right here. It pushed down, and then this candle comes and push back up through it. Simple. That's all what this entire action is. Price pushing down, which creates one candle. Like if I go on a 6-month chart, so let's go on a 6-month chart. So not so much, but here's that. And maybe a 1-year chart, 12-month chart. You start to see where it's just very simple, a push down and then a push back up. That's it. Here it is again, push down, push back up. And this was in the 70s. So this thing will never change, because it's the mechanics of the market. That's how the market moves. So if I go back down to the 1 hour now, to the present moment where we're at, where I'm explaining all of this to you now, I'll delete this and get back into here. Let's get on to, I'll make a next video now explaining how yesterday, which is Wednesday, the opportunities that you could have had on the 1 minute chart, and make it very simple for us to understand that, right? Big up on yourself.